Welcome to the weekly rate update. I'm Craig Fuller. Special guest today, Kevin Hill.
Thank you very much for having me.
So JP is out. His daughter is not feeling well today. So you are going to talk about the weekly rate update. What's happening?
Yeah. So basically it's a flat market. You know, nothing's really happening with rates. We're still flooded with capacity on the trucking side. Volumes are pretty flat week over week, but they're still 7% above where they were in October of 2018.
So year over year, 7% increase.
7% increase. Tender rejections on a national average are right now 5%, which is not a great number for rates. Contract pricing as well is coming down. It's continuing coming down year over year. And spot rates are just kind of hanging in there flat, you know, basically in the trough. I don't know if they can go any lower on national average.
Yeah, I think I don't think rates are going to be under pressure. Like at least for the end of the year. I think there's some seasonal elements to it. I mean, frankly, because of the tight timeline in terms of getting freight into the retail, into stores, and the shippers are less discriminatory in terms of price. Like if you think about what moves this time of year, you've got obviously retail goods that move a lot. You have grocery items that have a specific consumption cycle, turkeys as an example, or hams that you've got to get for Christmas dinner. All of that has a very fine and defined timeline that has to be in the store. Wrapping paper comes to mind. So shippers are less likely to negotiate price in this environment than they would be otherwise, because they don't have the sort of flexibility and timeline. And so I don't think we'll see any pressure on price, but the volume is, there were some real encouraging signs a month ago in terms of volume increases, but we've seen it sort of plateau.
We have, and really the economic indicators that are coming out right now, the ISO manufacturing index, which is dropping like a rock really. It went from 60 down to 48.7 in a matter of months, which is the lowest in, I think, 5 or 6 years at least. Weekly wages have seemed to peak for this cycle, along with consumer debt. So those indicators came out this week as well. So that plateau of about 7% higher than it was in October of 2018 seems to be plateauing right now.
Yeah, the consumer is the big factor here.
Mm-hmm.
It's the big variable in terms of whether we see any level of stability in the market or increases in the market. There's no signs that consumer spending is slowing down. We're not seeing anything to suggest that retail spending is down, but certainly in the manufacturing, second leg that we may have.
One of the bright spots on the industrials, though, is that we started, with Carrier List, we started calling and basically asking flatbed carriers what they're seeing from their shipper customers when they directly source freight from shippers, and the 30-day outlook from them, and it's pretty flat. So I saw an increase of about 2.5%. It's a small sample. We're going to keep running it, but we don't see a big drop-off in demand from the flatbed carriers.
Housing's coming back. I mean, housing did have a big surge a month ago. I think the tax changes of 2018 had a dramatic impact in certain markets like the Northeast and California, and so that may shift some housing. You know, I've talked to a number of folks in real estate that study real estate trends, and what they're seeing is that there is deurbanization. Bloomberg and Wall Street Journal have both reported that. We actually covered this 2 years ago. There was a professor at the University of Kansas that back in 2007, I believe it was, mid-2000s, said that cities over the next couple of decades is that people were going to start leaving cities, big urban environments, and go to suburban environments. And a lot of it has to do with what's really contributed to that is the mobility revolution with Uber and on-demand eating. You're able to get what you want. Why would you live in the city?
True. And a lot of the big DCs and warehouses, cheaper land, moving out into suburban areas, and either suburban or ex-suburban, right? Even further out.
I mean, I live 15 minutes from downtown Chattanooga, but I live what is a very isolated area of town that's on a mountain. And one of the things that we would miss if we didn't have delivery is a lot of the restaurants and services that we had. It was we were more in a denser population area, and because we're able to get delivery, we don't worry about that anymore. So.
Yeah, it's very good, but it does raise shipping costs.
It does raise shipping costs, and it changes the nature. And I think a lot of the slowdown in housing may have just been the pause and people absorbing some of those tax increases and stuff. Consumer is going to be the fact of 2020. If we look at what's going to keep the market humming, is going to be 2020.
On the demand side, the consumer. On the supply side, it's exits. It is capacity coming out of the market.
Here's the problem with exits. Is everybody likes to talk about the number of trucking companies gone out of business.
Yep.
But that doesn't matter.
It doesn't matter
because
at all.
At the end of the day, the drivers are getting jobs. Those drivers that get laid off from New England or LME or you name Falcon or whatever, they just go get another job. So they have not exited the industry.
That they have not. And interestingly enough, we've seen in insurance surveys and kind of getting in insurance data, finding those guys who went from 10 trucks to 12 trucks in 2018, coming back down to 10 trucks or 9 trucks, kind of constricts supply, but where do those trucks go?
Right? If they don't have trucks policies, are not disappearing.
I know, right?
I mean,
so where do they go?
Yeah, physical equipment doesn't go anywhere, and the drivers are still driving. So at the end of the day, just because you've lost hundreds of trucking companies doesn't mean you've lost thousands of drivers.
You have not now.
They may lose their job with the company they were at, but they're not out of the industry.
That is true, unless they go and start building houses. That's housing,
that is true, and that's really what you would want to see capacity constrictions. You want to see employment in other competitive markets like housing and construction. If we get big infrastructure, the big infrastructure bill could very well drive some of that employment. Warehousing obviously is there's a opportunity to take drivers from, or take folks, put them in the warehouses from driving population. So there are jobs that compete, and those are the sectors that you want to swell.
Oil and gas.
Oil and gas is huge. You know that from being an Oklahoma guy.
Yeah, but $52 barrel oil isn't optimistic for that. But if that climbed up to $60, $70, $80, you see really huge pressures on drivers and driver recruiting, because you can make a lot more money driving water trucks or working on oil rigs in western Oklahoma or West Texas.
We did see Stevens, though, exit because sand, and they were hauling a ton of sand, but now the sand is, they're finding sand right next to the oil, like on the basin and stuff, so they don't need to haul it from far out.
Minnesota or wherever it comes
Minnesota,
from.
Michigan, upper the Great Lakes, Michigan. Anything else?
I think it's really just looking at capacity and what's going on with capacity. That's my big theme all the time is capacity. I don't know when it's going to start constricting. Maybe in the first quarter, after the holiday season and those winter months, which are always lean for trucking. I'm hoping that Q2, as we roll into that, getting into a busier season, that we'll see a more normal market than we saw in 2019.
Well, I don't know. I wouldn't. Volatility is here. It is a friend to some and an enemy to most, but it is a fact that we have to live with. I would argue that volatility is going to be a permanent fixture, and it's just going to increase as information flows.
I do too. Yes.
So, well, Kevin, thanks for filling in for JP. You do have better hair, I must say, than JP. So at least you don't have it like
I know,
out there.
just out there, and
he
the
wears a
big beard.
hat so that we can keep him presentable. But I do like the cut, man.
I know.
So,
nice.
anyways, Kevin, appreciate you coming on. If you haven't got tickets to FreightWaves Live, be sure to do that. It's on November 12th and 13th. Kevin, are you registered?
I am registered.
That's awesome. Everybody else is registered, but maybe you're not. So be sure to register. Tickets do go up on October 15th. We want to make sure that you are there. It is going to be the freight party of the year. A rockin' good time talking about the future of the industry. We're going to dive into 2020 and beyond at FreightWaves Live. Get your tickets today.
Our industry is moving faster than ever. Where are freight volumes headed? How will this affect capacity? And of course, what's the newest technology that can benefit your business? Those questions and many more will be answered at the industry's hottest freight tech conference this November in Chicago. Come join us at FreightWaves Live November 12th and 13th at the McCormick Center. Visit FreightWavesLive.com to register.